While it's important to note that trading in the Forex market carries risks and there are no guarantees of making profits, I can provide you with 5 tips that might help you increase your chances of potentially making $500 more easily on Forex. 1. Develop a solid trading strategy. Before you start trading, it's essential to have a well-defined trading strategy. This includes determining your risk tolerance, setting realistic profit targets, and using technical analysis tools to identify potential entry and exit points. A clear strategy will help you make informed decisions and minimize impulsive trading based on emotions. 2. Start with a demo account. If you're new to Forex trading, it's advisable to begin with a demo account offered by many brokers. This allows you to practice trading in a simulated environment without risking real money. Spend time honing your skills, testing different strategies, and gaining confidence before transitioning to a live account. 3. Utilize risk management techniques. Effective risk management is crucial in Forex trading. Use stop-loss orders to limit potential losses on each trade and take profit orders to secure profits. It's generally recommended to risk only a small percentage of your trading capital on any single trade, e.g., 1 to 2%, to protect yourself from significant losses. 4. Follow fundamental and technical analysis. Stay updated with economic news, geopolitical events, and other factors that can impact the Forex market. Additionally, learn to analyze price charts using technical indicators, chart patterns, and support, resistance levels. Combining fundamental and technical analysis can provide you with a well-rounded view of the market and potentially improve your trading decisions. 5. Consider copy trading or automated systems. If you're not confident in your trading skills or lack the time to actively trade, you may explore copy trading platforms or automated trading systems. Copy trading allows you to replicate the trades of experienced traders, while automated systems execute trades based on predefined algorithms. However, research and choose reputable platforms, systems, and exercise caution before entrusting your funds to them. Remember, Forex trading requires continuous learning, discipline, and a long-term perspective. It's crucial to thoroughly educate yourself about the Forex market, manage risks effectively, and avoid making impulsive decisions driven by greed or fear.